Good morning, good evening, and good afternoon, everybody. Hope everybody's having a fantastic day. Today, we have a full show for you. It is high probability short term live with Mike Wade. He is from Michael Wade Trade Coaching. Now, first up, we have a market review. It's Fed Day. That means that we're going to have an interest rate decision today. Also, probably a couple things lingering from the big day yesterday and the day before. We're also going to talk about just Mike's sniper portfolio, which is a 90% win rate, 46 out of 51, still at that 90%. We're going to talk about some recent trades, Tesla and USO. Then we're going to go over a quick current trade, which is, I'll let Mike reveal that one to you a little bit later. Then we're going to go over some of your audience stocks. We're going to talk about some ticker symbols that you have, any questions that you have. Go ahead and get those in the chat now so I can get them over to Mike as soon as possible. Let's get to it. Mike Wade. Come on in here, man. How you doing?
What's up, Ryan? How you doing, man?
I'm doing all right. Doing all right. How about yourself?
Yeah, just living in paradise. Show you again. This is like.
Are you inside of a cloud right now?
Huh?
Are you inside of a cloud right now?
Basically, yeah. Yeah. That's a little valley there, and the clouds come in like water over the valley. Got my dog down there.
That's pretty cool.
Serving the jungle. It's beautiful. Yeah, it's really beautiful. I'm very happy to have created this in my life, and I've done it with trading, and teaching and trading and
yeah.
Pura vida, awesome, as they say here, which is pure life. That's how they say hi here. Pura vida, pure life.
Nice. I love it. Oh. I love it. Well, what we got going on in the market world today?
Yeah. You got to come on down and visit sometime, man.
Oh, I'd love to.
The kids would love it.
As long as they have good fishing.
Oh, yeah, they do. They really do. Really, really. All right, everybody. Well, Ryan, what was that thing that happened yesterday again? The presidential election.
That's the one.
And how did the markets respond? I mean, ba-boom. The SPYs, S&P 500 ETF, all-time high territory yesterday. And then we had the Qs, the NASDAQ 100. The Qs set an all-time high yesterday. The diamonds, the Dow Jones Industrial Average, set an all-time high yesterday. The IWM, good God, look at that. That's not an all-time high. It's pretty close, but small caps, which will likely benefit from tax cut measures, lower interest rates, lots of reasons for the markets to rise with Trump as president. And you can see very clearly the markets have responded with great enthusiasm. And even this morning, as I go to the CNBC futures, the Dow futures are up pretty much flat. S&P 500 up another 0.3%, and the NASDAQ up another 0.54%. And it gets better. There's something else happening today, Brian. What is it? Oops,
something about a Fed meeting or something like that.
Yeah, like this guy named Jerome Powell, who's the Fed chief. Today, they started meeting yesterday. Today at 2 p.m., there'll be a rate cut decision. We're not going to get any increase in rates. Inflation's down near to where they wanted it, around 2%. But it gets a little tricky. So most are expecting a quarter point rate cut. 25 basis points is how they say it. However, with Trump as president, it's expected that he'll implement his tariff policy, which is likely to raise prices and could spur on another run of inflation. So it's doubtful the Fed will do anything more than a quarter point and maybe hold steady until Trump starts implementing his tariff policies, which basically tax goods coming in the United States. And that's, that hurts commerce. It increases prices. So we could be paying more for stuff. We'll have to wait and see. That's what most are afraid of. And I'm sure the Fed is looking at that. So at 2 p.m., we'll likely get a quarter point rate cut. And then at 2:30 p.m., Powell will speak. And that's from 2:30 to about 3 o'clock. Powell's in a press conference and he answers questions. and people are always pining for what's next, what's the next rate cut, when are you going to cut rates next, all that. How's the state of the economy, the jobs market, how's all that? So all of that'll be discussed at 2:30. Bottom line is, at this point, we can expect some volatility after 2 p.m. I would expect the markets, though, up until 2 p.m. to sort of hang out in this territory where they are now. So you don't need me to tell you this, but market prognosis across the board is bullish. Strong reaction yesterday. So we're bullish on the markets for all intents and purposes. Let's take a look at our portfolio. Were the open trades. We had a trade. Let's see. Last week we placed. Was that last week? Yeah. Yeah. No, it wasn't. We had Tesla was a winner. We placed on 1024. Taiwan Semi came off. United States Oil came off. I need to show you. So I could show you these risk graphs, but if you follow the rules, you should be out of those three winners. And Ryan, let's take a look at our portfolio from the very beginning. Even when we were up with an APL around 15%, we had a win streak of 18. And I told you, yeah, we're up 15% on average I think it was 5-day period. But normally over time, this system normalizes at a 90% win. We had 51 trades, 46 were winners, and 5 were losers. So we are currently running at a 90% win rate. Our average profit per trade is 10.45%, and we make that 10.45% every 6 days. Average initial risk in the trade's 372. So here's how you can think about this. Yeah, 10% isn't a lot, but when you do 10% with the same money, week 1, week 2, week 3, week 4, those numbers, those small APL numbers do start to add up. All right, so this is the sniper game. It's high probability. It's short term. Get in, get out. A lot of people like trading that way, especially men who like immediate gratification, like this guy. So it's a really fun system. I actually, of all the trading styles I have, this one is the most fun. And so let's have some fun. Let's take a look at, my God, there's so many of them. And by the way, Ryan said, put your stocks in. I'm going to give you one, although there are many opportunities, sniper opportunities this week, and we'll have them again next week and the following week, right up into Thanksgiving. There'll be tons and tons of these setups. Pop the stocks you want to look at in the chat box. And when I get done with this trade, then we can talk about your trades. All right. So I'm going to let you kind of drive the show today a little bit. So Ryan, let's pop up the trade of the day on a company that's in the green energy space. SolarEdge is, there we go. All right, SolarEdge Technology, the solar power. Now listen, well, first off, let's talk about their earnings. They just announced earnings and they missed on their earnings, and they didn't say much about their future guidance. And Donald Trump will likely repeal the Inflation Reduction Act, which is favorable for green energy companies like SolarEdge. All right, so this is some really bad news. Let's take a look at the stock SolarEdge. I'm using this nifty hub software. If you want to know more about it, just go to hub.com and you can check it out. So let me pull up this watch list here. And SolarEdge, yeah, they make solar panels, man. And so the stock yesterday closed right here. Let's zoom this in a little bit. So it dropped yesterday because of Donald Trump becoming president of the United States. It came down because he's not gonna buoy up solar companies. So the stock came down on that news, and then after that poor earnings announcement, the stock is currently trading right down around 13. All right, so the stock's down. It has very little reason to rise from here with the new with the Republicans in the House and their stance on solar green energy. And so the stock is down at 13. All right, so it's down what? dollar. It's down about $1.60 or so. So this is a really good example. And the decision we need to make now is, where's our line in the sand? Now, the line in the sand is my colloquial way of saying support or resistance. So I want to draw a line and get as far away from the stock as I can, and maybe generate 10%. If the stock's down at 13, it could bounce a bit. It could get back up to the top of the bar from yesterday. I don't see it recovering from where it was before the election. So the place I'd like to start, how much time do we have? We have 4 minutes. I'm right on time. So I like this 1750 level. Why do you like it, Mikey? Look left. Boom. 1750 support. It was support here, became resistance when the stock came down below 1750, bumped its head, nope, bumped its head, nope, bumped its head, bumped its head, bumped its head, nope. And then here it closed slightly above in anticipation of perhaps Harris winning and that being favorable for solar companies. And then today, then it dropped when Trump became president, and today dropping further because it's missed on its earnings. All right, so we're going to try for 1750 here. Let's go right into a simulated Thinkorswim environment, and I'm going to see what's there. Now, the reason we snipe in the morning like this is so we can catch the extra implied volatility that is going to be there because the stock just tanked. There's a lot of bearishness on this sector, so maybe we can get something up here at 1750. All right. Now, so what I'm going to do here is sell the 1750 calls. I need to mention one other thing. The granularity of the options expirations is weekly. So usually I like 15 days. I can take an 8-day if there's enough credit, but 15 days is the sweet spot I work with. So we're going to use the November 22 options. So the 1750, 1850 yesterday was bringing in 29 cents. Now with the stock down about $1 or so, that credit this morning will not be available. So I can come in here. I'm going to fish for 15 cents. I've got 2 minutes, so good. That's the best timing I've had so far. So we're going to try for 15 cents. Very likely we can get 10, but let's just cut it in half from yesterday. See if we can snag 15 cents. The minimum I want is 10% of the spread width. So 1750, 18, they're $1 apart. 10% of that would be 10 cents, but I'm going to ask for 15 cents because we're going to try to catch this extra IV in the morning. So I'm going to do, let's see here, I'll do 5 of these. You can do 1 if you like. 1 would bring you $15. 5 would bring you $75. And then I'm going to confirm and send. And this order is sitting there waiting for the markets to open in about a minute and a half or so. 1 minute. Markets open in 1 minute. My favorite time of the day. Let me show you this trade in a nice clean format. These are the November 22nd, 1750s. So just so you're really clear. And then we're going to buy the 1650s underneath. Okay. So this is what I just did. We're going to sell to open the SEDG. That's a symbol. Expiration date is November 22nd. I got the wrong date there. November 22nd. Sell the 1750 put. That's our line in the sand. And then buy the underlying put of 1650 and get at least 15 cents or at least 10 cents. I'm going to try for 15. And then and now I'm going to watch this closely as the market opens. And we are about 10 seconds away. Here's my working order. I want 15 cents. May I have 15 cents? Here we go. Ba-boom. I'm like Pavlov's dog. Literally, my mouth starts watering when the market's open. This is like the funnest game on the planet. If you do it well, you can make some money. Oh, no, look, already you can see that it's at about 8.5 cents. All right, so I'm going to try to catch it at 10. That's my minimum. I'll cancel replace. I know I'm moving a little fast, but you kind of got to do that here. Confirm and send. And I'm going to let that marinate for a bit. So I'm asking 10 cents now, and currently we can get 6.5 cents. So we're going to have to either wait, we could add more time, or actually, let's try that. Now, if you go back, let me do it here. Cancel, replace. One option you can do is say, all right, well, I'll go out to December or November 29th. That's a 22-day trade. And the reason I don't like doing that is because it gives the stock more time to potentially recover. Well, I got 10 cents. I just got, well, I can stop talking now. I just got 10 cents on that. Let me finish the thread just in case you didn't get filled at 10 cents. So here's the filled order. You can see here we sold the 1750 for 61 cents, bought the 1850 for 51 cents, 10-cent net credit. That's what I wanted. That's my minimum. Now, if you didn't get filled, there's a couple of things you can do. One is you could say, all right, well, let me add more time. I can go to November the 29th. That's a 22-day option. And there is 11 cents at the mid price there. So that is available. That will fill for 10 cents. But, and I don't think this is a big but a but. And you can see Solar Edge is starting to bounce a bit. So we just got in for 10 cents here. Now, for a 2-week trade. And if you sell the 3-week trade, Solar Edge has an extra week of time to potentially recover. So like a sniper, you want to take your shot, get in and move out. So that's that would be an approach as well. And then as I'm watching the stock sort of recover a bit, I think I'm not gonna go any lower. I'm gonna stay with what we have. Just to be really clear, this is the only trade I would do on this one is this. Take 10 cents. We just got it in a simulated account. And then once you're in, most importantly, you want to put your lot, make sure you understand when you're going to get out. So if the stock closes, oh, I did calls, right? I hope I didn't make a mistake. Yeah, I got calls. I just got my spreadsheets inaccurate here. So it's calls. So now, as long as the stock stays below 1750 by expiration on November 22nd, we're going to make money. That's where our probability comes in. All right, so once you get your 10 cents, then plan on being wrong. So you want to get out of this trade if the stock closes above your line in the sand, 1750. So going back to the stock chart, what that means graphically is if the stock recovers up to 1750 and closes above it, then pull it off and manage your risk. So that's the most important one. And then, of course, take your profits. And so what we like to do here is automate the profits and have these trades come off automatically for 10% of what you sold it for. So once you're in, the next move is to put a good till cancel, which is GTC. That's the initials for that. Buy the spread back to close for 10% of the original credit. Original credit, 10 cents. 10% of 10 cents is 1 cent. And when that order fills, you'll be out of the trade for 90% of your max profit in the trade automatically. And so when you do it this way, all you got to do is keep an eye on the stock chart. And if the stock starts to get close to 1750, keep an eye. And then 30 minutes before the close, if the stock looks destined to be above 1750, watch it till about 10 minutes before. 10 minutes before market closes, then close it out on market close before the market closes if the stock is above 1750 with 10 minutes to go or 5 minutes to go, depending on how facile you are with your broker. There's mine, Ryan, but there are a plethora of other opportunities. Any of our community members here have a trade or stock?
David asks about GM.
General Motors? I didn't see that one this morning. GM. All right, let me add this to the chart here. Here's GM. Well, I think GM above 50 is a good idea. Now, let me say, the sniper system is a very specialized way to trade credit spreads. Now, without even checking the news, I would say, man, there's very little chance the stock's going to be below 50. Very little. Why? Well, there was a strong resistance level that was breached here with great enthusiasm, aka volume. The stock came down a bit and then has been making a run. So even without checking the news, I like this above 50. So selling a 50 put spread, sell the 50 put by the underlying would be a good trade. But since we're sniping here, I'm going to go to finance.yahoo.com and I'm going to see if there's any news today on General Motors. Let's see. Yeah, I like it. I don't. It's earnings. I don't see the earnings. There's no earnings today. It's up because of Trump. Looks like you could use that as your news, but it's not strictly a sniper. But I like it above 50. I'll say that. Any more, Ryan?
Cool.
Bring them on, baby.
We got Amazon from Jim.
Oh, I like Amazon. You know, Ryan, when I lived in the States, I've been down in Costa Rica for 2.5 years, but I used to have, I probably get 3 or 4 Amazon deliveries every week. And guess what? They don't have Amazon down here. It took me
Oh
a while
no.
to, oh my God, I know. It was, oh no. It took me a while to get over my Amazon habit. Um, so Amazon's off to the races. Again, similar story. Look left and find support and resistance. That's been, I like at least a month here, the stock. And normally this is the fun part about support and resistance and why I'm so religious about it is that these pivot points tend to live at round numbers. This is 195, not 196, not 194, 195 resistance, 195 resistance, 194 support. Massive break above here on high volume. This stock doesn't look poised to come back below 195. I like Amazon above 195, but I'd like it better if there was some earnings news today. Does anybody have any earnings candidates today? And this is not one of them for today. Wait a minute. Okay, yeah, I'm sorry. So the Amazon did announce earnings. Tell you what, I'm going to go to a live.
Oh, David didn't mean GM. He meant good morning.
Oh, hey, but it was a good looking trade. Oh, that's great. Good morning, Jim. GM to you too, buddy. Yeah, I'm just looking for news. I don't see any news on Amazon today, at least earnings related. Let me check a chart here. Yeah, the earnings news happened about a week ago, and it was good. So it's a bit late, but now that the stock is setting all-time highs, I think Amazon's a good trade. Again, it's not strictly a sniper trade, but it did announce earnings up in here, which propelled the stock to all-time. These are all-time highs, by the way, on Amazon. I like Amazon at 195. Sell the 195 put spread. Sell the 195, buy underneath. That looks destined for profit as well. Let's do one more.
Got a couple of people asking about Lyft.
Yeah, I was looking at Lyft too. Good job. See, we got our community is learning, man. Oh my God. What? Lyft gapped up. I know the earnings were good and they lifted guidance because I was looking at this one today too. Lyft. Maybe we'll try to get this one. All right, let's see. So I'm in finance, Yahoo Finance, and you can get news anywhere, of course. But Lyft soars after earnings. It lost a bit of money, but soared. And I believe they lifted their guidance, if I'm not mistaken. Lyft expects sequential growth in fourth quarter bookings as quarterly revenue tops estimate. So that's essentially a raise. because their business is rising. They're getting more bookings. Beat and raise Q3. There you go. That's very simply said. Lyft soars 20% on beat and raise Q3 performance. Boom. That is the bifecta. So now I'm going to the chart and I want to see derive some lines in the sand, a support level. And so I'm scrolling back because I want to look left. I want to look left and I want to start identifying where the stock tends to find support and resistance. Lines in the sand. And when I look left, I see right here at 19. Round number. I'm telling you, that's where these things live. Resistance, resistance, resistance. Support, support. So the stock is nearing 19. It's probably not going to get above 19. It could, but that is going to be solid resistance, and that could result in something like this happening. All right. Now, where might it not drop to, though? And then I start doing the same thing. Look left. It's so funny. My eyes just see this stuff. There's this support, this level here, which is at around number 16. Come on. You should be very excited by this. This is the coolest thing you can put on a chart. All the other stuff is you. Trumps them all is support resistance. Learn it, use it in everything that you do, whether you're trading LE or you're trading parabolic SAR or MACD or DMI, ADX DMI, whatever it is, you're at least incorporating support resistance. And this is our cornerstone here. So I would say the closest I would get on Lyft here is 16. I would rather, though, get down the average. But because the stock, which is where it was yesterday, because the stock has risen so much, there won't be any credit down here. So I would say 16 would be as close as I would get. But what I'm worried about is it hitting 19 and then dribbling back down. All right. If you're also worried about that, then drop your short strike. I bet there's 1550s, and drop it one strike below 16. I think Ryan, that would be a decent trade on Lyft. The thing about stocks that gap so much is that finding support resistance becomes a bit more troublesome because you can't sell where it was yesterday. We wouldn't get enough credit down here. So you have to come closer, and that makes it a bit more risky. I'll give you another example here. One I was going to trade today, but there just isn't any serious. We can take a look at this one on Krispy Kreme donuts. I love Krispy Kreme donuts, especially when the red sign is on. And this one here at 1250, if you can get enough credit for it, would be outstanding. Why? Well, there's this blue line here. That's the 200-day average. They missed and lowered their guidance. And the stock has come down hard. So I like this one below 1250. But the problem, and we can just take a quick look on donuts. Cool option symbol. So let's go and see if we can get anything at 1250. Here's the problem we have. We have 8-day options and 43-day options. I don't want to sell a 43-day credit spread. Why? Well, I got to wait 43 days. I got to wait over a month before I can get out of the thing, usually. And then I can just check. And you can see here, 1250 is not bringing any money. So I'm not showing you that because it's not a trade. I'm showing it to you because this is kind of the idea. This is an extra bit of probability you get if the stock doesn't gap too much. You could try for 12 on this one, but there are no 12 strikes, and there's not enough expiration granularity. So unfortunately, in fact, I was ready to do this one this morning, and then I discovered this here. The option expiration granularity was too small. All right. Hey, Ryan, there's a lot of moving parts here, isn't there?
Oh, yeah. How would I keep up with it all?
I don't know. You know what we need?
What do we need?
We need a guidebook.
Huh.
We should get a guidebook.
I think I know a guy that has a guidebook.
Yeah, I know the guy too. There is a guidebook. And free, meaning it doesn't cost any money. It's free. So grab the guidebook in the link below my face. And on the recording, you'll see a link where you can grab the guidebook. You give us your name and your email address, and we will send this to you. It's 5 steps. I think it's about 30 pages or something. I don't remember. I did write it, but I can't remember. But it's very comprehensive. Takes you through the 5 steps of sniping. What are the good opportunities? What kind of news do we like? How do we derive lines in the sand? How do we build a credit spread for a bull and a bear? I got dogs. And then most importantly, how to manage. So grab the guidebook. Join us every Thursday morning at 9:15 where Ryan and I snipe. And we're doing well, 90% wins, average profit 10.45% every 6 days. Want somebody that wins every Thursday at 9:15. Have a good day. We'll see you next